Just like a picture worth thousand words, a candle is worth many words, price codes, and lot of interpretations.
Hi friends, welcome to a brand new segment of Invest Talks, Friday Basics, which will give you good insight about Indian equity market. My sincere effort in this segment is to create awareness to all in simple language. This series will be arranged in such a way so as to understand everyone who are beginners. Please share this video to all those who wish to learn, understand and participate in stock market. Please don't forget to subscribe and click the bell button to get the notifications of upcoming knowledge-packed videos on personal finance and stock market. Welcome back to Finvest Talks, where we make everyone understand the basics of money management. Before going into this video, make sure you watch earlier videos of this series, which is mentioned in the I button.
Now let's start with the candlestick. By definition, a candlestick is a type of price chart used in technical analysis that displays the high, low, open and closing price of a security for a specified period. Now let's see the history of candlestick charting. In the 18th century, a wealthy Japanese businessman, Kunihisa Homa, developed a technical analysis method to analyze the price of rice contracts. Today, this technique is called candlestick charting. Homa from Sakata, Japan, began trading at a local rice exchange around 1750. He kept records of the market psychology learnings to boost his profits by carefully monitoring prices and not to rushing into trades. Homa is regarded as the grandfather of candlesticks because of his research on price recognition pattern. They were introduced to Western world by Steve Nielsen in his book Japanese Candlestick Charting Techniques, first published in 1991. Candlestick charts use the same price data as bar charts, like open, high, low and close. However, candlestick charts are drawn in a much more visually identifiable way, typically resembling a candlestick with wicks on both ends. The high and low are described as shadows and plotted as a single line. A candle is a graphical representation of the price traded during a certain defined period. For example, if we are talking about a 5-minute candle, then 5-minute candle shows price range during that 5 minutes with open, close, high and low points. The first trading price is the opening level of that candle. Closing point is the closing level of that candle. Also, a candle will represent the highest price point and the lowest price point made during that period of time. If the closing price is higher than the opening level, then the candle's color will be green or white. While if it's lower, then the color will be red or black. A green candle will show the bullish mood of market participants. It shows the bulls could successfully take the prices higher. Similarly, a red candle will show the bearish mood and also bring the prices down. Thus, every candle depicts the battle fought between bulls and bears. Now let's see how to plot a Japanese candlestick. It is similar to a regular candle wherein the candle is having a body and a small wick where the flame used to happen. So here this is called a body. This is the wick or it is called shadow. Similarly, in a candlestick, it will be the body. It can be either green or red, having a wick on the top and wick on the bottom. The bottom represents open or close, and this is the topmost point, that is high, and the bottommost point, it is low. Now we will see how to represent the Japanese candlestick. The candlestick is also similar to a line chart. Actually, candlestick can be derived from a line chart. First, we will see how the line chart is being represented. There is a stock called XYZ, wherein the price varies from 20 rupees to 80 rupees. And we will represent it for a whole day. So it will be 8 hours. Let's assume the stock opened at 40 rupees. From there it moved to say 60, then 80, came back to 20. Again it started fluctuating here and there and it closed the day at say 60. So the open point is 40, close point is 60, high is 80 and low is 20. Similarly, we can represent the same thing on a candlestick. Here the open is at 40, the body closed at 60, and there is a wick on the top side till 80, and on the bottom side wick up to 20. So it's here it is the open, close, high and low. When the close is above the open, so it is called a green candle. Similarly, vice versa, it will show the red candle. Always green candle will show a bullish sentiment, whereas red candle will show a bearish sentiment. In case of red candle, the open will be on the top and close will be on the bottom. This is how the candlestick is being represented. There are different types of candlesticks available, such as this is Marabasu, wherein it can be fully green or it can be fully red. Then comes Doji, spinning top, gravestone. So there are different types of candlesticks based on the sentiment. So we will see each one by one in detail. Now let's see the anatomy of candlesticks. The anatomy of the candlesticks has stayed almost similar throughout the ages. It consists of open, close, high and low end. It is like a combination of line chart and a bar chart. Each bar represents 4 important pieces of information for that particular time period. First one is the body. Body is the hollow or filled portion of the candlestick. It can be green, white or red, black. Long body. Long body indicates heavy trading in one direction and strong buying or selling pressure. Small body, which indicates lighter trading and lighter buying or selling activity. Shadow or wick. The long thin line above and below the body is called shadow or wick. So in this chart we can see high, close, open, low of a particular candle. Body is the hollow or filled portion of the candlestick. Shadow is generally called wick or tails. The long thin line above and below the body represent high or low rank. Upper shadow. High is marked by the topmost point of the upper shadow. Lower shadow. Low is marked by the lower part of the lower shadow. Some of the important candlestick patterns are hammer, inverted hammer, spinning tops, doji, marabazu, etc. One can learn about candlesticks and with some effort, one can memorize candlestick pattern quickly and apply this knowledge in a short time. One doesn't need to invest months or years to master them, unlike other elements in trading. As it is rightly said, practice makes perfect. A mighty technique which has stood for approximately 300 years and still counting. Candlestick continued to change this world. If someone is planning to take any course on analysis of trading, it is better to have a beforehand knowledge on candlestick, which will benefit to make the course much easier to understand. Candlestick today are used by swing traders, day traders, investors and almost all financial institutions because of they are very easy to understand, patterns are very easy to identify, they can be used with other indicators as well, and they allow to understand the sentiments of investors. The color and length of candle help us to determine whether the market is bearish or bullish. Also displays reversal patterns which cannot be seen in other type of charts. Candlestick patterns are highly accurate in predicting the market trends. In our next video, we will see what are the different type of candles available and how the price fluctuation for a particular duration will reflect in a candle, and what are the different types of bullish and bearish candles available in technical analysis. So stay tuned for an interesting session on technical analysis going forward.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday Basics to make your stock market journey easy. Thanks for watching and have a good day.